So, can you now hear me? I think. Bear with me a second. So, can you now hear me? It now looks like you can hear me. I hope that's the case. I'm sorry about that difficulty. There was some setting which seemed to have changed. I think we are back. Let me just double check it. Yes, okay, fantastic. Sound is back. Okay, I'm so sorry about that. That was a bit of a false start there. I was just alluding to the fact that we during this session, when we trade the US Open, we look for high probability trading opportunities across some of the world's largest markets. Not just your foreign exchange, not just your commodities and your oil and your gold markets, but also the global indices as well. And it's just important for us when we trade to understand the bigger picture views, understand the correlations, understand whether we're in a risk on, risk off market condition. And then we look to sort of systematically really look at news events, see if there's anything that can impact our trading over the course of the session. We follow through with our trade plan, which we go through every evening with our traders. All right, fantastic, guys. Thank you. I'm so sorry about those sound issues, but it looks like everything is resolved now. So that's good. So we can move on then. So looking at some of the data points currently up on screen, what we can see is we have a bank holiday in the US. And a lot of people do sort of say, well, will there be opportunities? Is it tradable? And the answer's, I suppose, it's yes, but it's kind of with caution, so to speak, because what we can't really do during a trading session, especially when the US have a bank holiday, is to expect explosive moves. And this is traditionally speaking, it's normally lower in volume, and as a result, will we get sort of big explosive moves? And we've already seen some significant moves over the course of the day, but there's a very, very important feature that I'm going to highlight in just a moment when I bring up the charts. That will just give you a little bit of context behind some of these moves. But we've got Spring Festival in China at the moment as well, so it's a festive period. It's a time off for all your financial institutions in China, and that's likely to lead to lower volumes during the Asian session as well. So apart from that, there's no major news events for us to have to really contend with. And of course, we constantly keep in the front of our minds the geopolitical events, the major macro events, so to speak, the COVID, the rollout of the vaccine, the impact that the restrictions are likely to have, central bank monetary policy, fiscal stimulus packages. All these sorts of things are by far dominating these markets, and as a result, we're seeing some continuations in some very important markets. One of the first things we want to do when we look at our charts is to have an understanding for what are the current market conditions, because and what we mean by that is other markets in a phase of risk on, where traders and investors are where there's an appetite for taking on extra risk, and if so, we're likely to see that capital moving into the equity markets and your global indices. And what that generally means is you generally see money coming out of markets like your safe havens, like your yens, like your Swiss francs, and your gold markets. The dollar seems to be moving to a slightly different phase. When COVID hit last March, the US dollar was negatively correlated with the US indice markets, i.e. the indice markets were pushing up and the dollar was pushing down. And we'd see that correlation quite often. So really the focus really started, that was one of the main correlations that we were talking about regularly. Ordinarily, what you would expect to see is if capital is moving into your risk-on assets, then you would assume that markets like the yen and the gold market would sell off quite considerably. But really, the main focus has been the dollar. But that has the potential to unwind itself just a little bit. That's what we've seen. We've seen some recent moves in the US dollar, and are we still in that phase? That's the interesting question, because we're in this sort of transition phase at the moment, and it does still remain to be seen whether that's the case or not. So we've got these markets currently up on screen, and just following on from last Friday's session, where we were primarily looking for the dollar to actually show a little bit of strength, and we did see a decent move actually for the majority of Friday, and then a very significant reversal. Today we're sort of trading inside this range between the 21.43 and the 21.20 levels. So there is only about a 20-30 pip range in this euro dollar, which is very, very small in terms of range. And Friday's reversal candlestick doesn't generally fill us with huge confidence in these markets. But just to take, I suppose, a little step back, really, we've had a really explosive move in the indice markets. So, we're seeing these markets make all-time highs, on Friday. Very, very bullish trading day on Friday. And we're seeing it across the board with really strong continuation today. Now, there's a key feature, like I said at the beginning, to these moves. And that's the time at which these moves occur. Is something quite interesting, because if you break these down and you look at them perhaps in an hourly time frame, we're getting these really late day moves. So what that implies is the market is moving quite considerably. If you can look at, if this is the range over the course of the whole day, and I'm going to get up our pen so that we can just highlight these levels. So let me just zoom out a little bit more. If we can say that we're largely spending the whole trading day just trading inside this range, up and down, we're getting to the close of the day. So for the majority of the trading day, the market has just moved sideways until the last hour, until we see this market just take a really explosive move to the upside, making all-time highs at a very, very late stage in the evening. Now, it's not ordinarily been an objective of any, certainly not retail traders, to be getting into this trade just prior to the close. Although that's what we're seeing more and more when we trade these financial markets, is this significant momentum coming in at very, very unusual times. And then what we see is when the market opens, it gaps higher. So it's got this little gap to try and close. And then this makes this trade here over the course of the Asian session a bit precarious. And as you can see, most of this range has been moving sideways. So what I'm saying is, these markets are proving time after time to be unstoppable to the upside. But often when you break them down, they can be quite challenging to trade. And I'm talking about from a retail trading perspective. There's a lot of investors out there that will look to get involved into trades over the long term, and financial institutions where really the actual price right now doesn't matter hugely. What they anticipate is the value to be higher at a future point in time. But it does present us as retail traders with some difficulties, because unless you're willing to get into trades prior to the close on a Friday evening and trade the Asian session, what we've seen in these markets isn't much use to us, especially when we trade breakout. So the price action's perfect for us. We're seeing the breakout trade. It's easy to identify. It's just the times at which they're occurring is what is proving quite challenging. There's your breakout trade in the last hour of the trading week, and then you're getting the continuation move with, to be fair, a lot of hesitation, and then you get one hour of bit of bullish price action followed by 12 hours of kind of nothing. So it is important to identify these behaviors, because what it suggests to us more than probably it ever has done before is that the moves can be tradable when the moves occur, and we used to look for volatility and capital coming into markets around the European Open, around the US Open, but now what we're seeing is when the European markets can close, we're seeing some great opportunities, 5, 6, 7 o'clock of an evening, which is quite a new phenomenon. And we're seeing a lot of activity around the close of financial markets, which again is, it wasn't really what we traditionally focused on when we trade financial markets. So it is the reality of these financial trades, which is why really our own approach here at the Live Trade Room has become more opportunity focused. It's become a little bit more about when the moves occur rather than, making sure that we get in and out of these markets at certain times of the day. So this is the beauty about financial markets. They evolve the whole time, and we've got to identify and see these patterns, and then it can give you a little bit more confidence behind those trades. Yep, good stuff. So that's just giving you a little bit of context, because you would look at these markets and think, wow, these are fantastic. And we spoke an awful lot about the 65.77 last week, that this is your high probability trade. The price action before it is less than inspiring. For 2, 4, 6, 8, pretty much 9 days, because I'll show you this little move again at the end of the trading day. So, but for pretty much 8-9 days, this market has pretty much just moved sideways. And again, we're breaking these markets, in the last few hours of the trading day, and that's really the time at which we're not that interested in getting into these trades traditionally. And then the market sort of opens and becomes really quite aggressive during the Asian session, and we see a bit of continuation during the European session as well. So identify that there's very little opportunity to get into this trade. What we ordinarily look at is the breakout trade, which is your opportunity number one, which was at the close of the Friday session. And you really don't want to get into markets at the close of a Friday session. It's probably the worst type of probability trade, because something could happen over the weekend and the market could gap lower. So it is a tough place to be trading, the market close on a Friday evening. But we've seen some strong continuation. But as you can see, we've just had the move higher. We've not had a correction where we can get in on the second trade. So this is trade number one. which we've missed, and we're not able to get into trade number 2. We're not able to get into the pullback trade, so that's not really on the cards for us. So we've got to wait for that corrective move. Otherwise, all you're doing is buying. It's not an all-time high, but it's not too far off it. But we know the trade that we kind of would like to get into if it will give us the opportunity to do it, and that's been the challenge recently. So the DAX, this is on a smaller time frame as well. You can see it gapping up. You can see it becoming a little bit bullish on the close, and then we gapped up significantly. So again, it's and actually reversed. So we gapped to the upside on a late close, and then have closed that gap pretty much now. So that's what this signifies. This little move in here is attempting to close that gap. So what you can often see is markets come back to close and then take that next leg to the upside. The only thing is, with the lack of volume potentially in this market, being a US bank holiday, it does make it a little bit more challenging. So going back to the basic principle, really, then, if we can determine what markets what phase these markets are in, we can clearly see. If we look at the US indices, we're at all-time highs across all 3 markets. So we're broadly speaking, we are in a risk-on market condition. So where does that leave our current trades? If I just share, or I'll look to put these markets back up on screen. And the gold as well. What does it mean for the US dollar? Well, that's still questionable in terms of what that means for the US dollar. So some of the reasons why we were looking to get in on the dollar strength trade is because we started to see some significant moves across a number of major markets, like the euro dollar. This move here just signifies the potential for all of those buyers to start getting out of those positions. There's your structural failure trade to the downside, and all this has been really so far is the pullback. So even now, and we got close to these highs again today. So even now, our bias is still to the downside purely because of our analysis. So there's still a potential opportunity. And seeing today's market reverse the way that it has is actually good for our sell trade. So we're in this market to the downside. We had to make decisions. It was either get into the euro dollar and the dollar Swiss, or really to buy the pound yen, and to sell the gold market. And the euro dollar and the dollar Swiss, out of the 4, have just proven to be not as successful as the move to the upside above the 104.85, which is what we were discussing on Friday. So we're seeing this market accelerate to the upside, and we're also continuing to see a bit of further downward pressure as far as gold is concerned. And what we want to make sure is that we don't get rattled by these markets, because what we're trading, or the trade idea, which is counter to a lot of the media speculation regarding the dollar, is just assessing these market conditions. And this market has made its move to the downside. We're below the 50 period moving average, so there's a number of levels of resistance in these highs in here, but this is just technically the pullback. Now this is not in our favor. This little move here is not good for us. It's not what we want to see, because it is a rejection to the downside, but we're staying in it. We've got quite a small stop loss on this trade. It's a technical stop loss, and what we have with this market is a high, a lower high, and a further lower high to the downside. And what we're seeing is a low followed by a lower low. And for those of you that are interested in technical analysis, what we're looking to trade is the potential for this market to actually roll over to the downside. And for that to happen, you need to see a series of lower highs and lower lows. And all we're simply anticipating is this market making a new lower low in the not too distant future. Now, we're having to be super patient with some of these trades right now. Just look at the price action in the last 4 trading days. We're not trading clean markets. They're not giving us really clean price action to work with on occasion. So that's absolutely the market's prerogative. They can remain illogical far longer than you or I can remain solvent. So that's something I picked up very, very early. And what it allows you to do is to not try and work out what's going on, but to just purely accept the price action as it unfolds, and not question. Our overriding analysis is fairly simple and fairly straightforward, as you can see. But we're looking for this next lower low. Now, this very well may go against that, and we might, this might be a rejection to the downside, and we'll start seeing some strength pushing actually higher, which would be in a little bit more in line with the status quo. But we're not really looking to trade that particular move just yet. And the dollar is in a strange position as well. So it's strong against some currencies like the yen and the yen trade, and was there another one? That the CAD strengthened, the Aussie and the New Zealand. Yeah, so this was rolling over, I guess, at some point. But yeah, so the dollar has been strengthening against the yen and in the gold market as well, of course. So this is crossed with the US dollar. So a little bit of strength in gold, and dollar strength in gold and dollar strength against the yen. So it's not by far the weakest trade. We are now seeing the euro yen break a new high, and the pound yen. So this is a really impressive move, as you can see. And we had been talking last week about trading this breakout trade. So if you see this little move here, that firmly was the breakout trade, again occurring quite late in the Friday evening, and then we opened up last night and continued its move further to the upside. So again, it's one of those trades that seems to be moving aggressively during let's say inappropriate times, because that seems to be the case. And what we would ordinarily like in some of these trades is to get in on a pullback. So when this market makes a high, if it pulls back to this level, then we can get into the trade. But that didn't happen. So just a little shallow pullback, pushed higher. Now can we pull back to this to get into this trade, even to this level in here, and take this level to the upside? The answer is no. So now we're up at these highs, and we're looking at this. Can we see this market come back in and around this level to take it for a third time? Got a bit of a question mark over that. Will that be the case or not? We don't know. We'll have to just trade the price action. So even with the move, and the breakout trade is a straightforward one. It's quite easy to identify. You look for consolidation, and you can get your pen or whatever, and you can just say that when you're looking at this market, the previous price actions coming from below, so you would really be looking for that opportunity to push higher. We just didn't get into that opportunity due to the time at which it occurred, and we're seeing that across all the equity markets as well. So not as easy and as straightforward as some of these moves perhaps appear, but the direction is definitely in the right direction, and what we would generally look for is corrective moves, so pullbacks in some of these markets to get into these trades. So so what we're doing is we've got the US open at 1 o'clock. The cash markets open. The stock markets don't open till 2:30, but we don't trade individual stocks. We trade the actual indices. So we need to just go through these markets. What we'll do is we'll identify those that give us are likely to give us the highest probability trades. We'll set up our trade plan for the session, and unfortunately it might be a case of see how we get on with some of these trades. So the euro dollar is drifting sideways, and we do expect this market to roll over eventually, but we've had to put up with 4 days of let's say erratic price action on both sides really, and a very, very tight range as well over pretty much 4 days. So so the pound dollar is the obvious place to start. So so we'll definitely have a look at the pound dollar to the upside. We can take note of this high in here. What we'd like is a bit of a corrective move. We don't necessarily want to get into the high of bullish candlesticks. We want to see if we can wait for a constructive pullback, at which point we'll look to get into that trade. So we'll come back to this in just a moment. The dollar yen, you know, we are seeing the capital come out of the equity markets. The dollar is a viable option, but the pound really is much stronger than the US dollar. So by the process of elimination, the market that's likely to give us the best move would be the pound yen. So we can look. In fact, we look at the dollar yen and the pound yen. So we'll see how they're correlated to one another. So what else have we got across the equities? Sorry, the dollar pairs, should I say? The dollar Swiss, it's like the euro dollar trade, so we are looking for this market to continue higher. It's currently having a little bit of a pullback from Friday's price action, and really Friday's close is not great either. But we do have a really tight range with this, so if it does become a profitable trade, we're likely to make some decent return relatively quickly. If we get anywhere up to these highs up here, we're talking about maybe a 4 or 5% return on the trade if we're correct, and that's important for us when we trade. We want to risk 1% when we lose, but we want to be able to generate 2, 3, 4, 5, 6, 10, 12% when we're correct, depending on the opportunity, of course. And we can increase our trade size. We haven't done for the best part of a year pretty much, with a lot of the sort of turbulent market conditions that have been going on. It has been, I suppose, a considered risk and management approach from our perspective to actually reduce down trade size during quite choppy and erratic market conditions. Now we can begin to turn that up a little bit. If we identify high probability trades, we are liking the correlations that we're now beginning to see across these financial markets. And if that gives us what we call no-brainer trades, we want to get into them. We might load up a little bit more. We might take on a little bit more risk in those trades and look to let them go. And that, if you can do that, if you can be disciplined enough to cut your losers short, we don't really want to get too stressed and anxious about our losing trades. They're part and parcel of trading these financial markets. What we want to be able to do is to let our winners run. And that's the key to successful trading. And to not panic as soon as your trading account goes into profit, and to look to book into that profit, because what you're then doing is limiting your winners. And for us, for those of you that have been trading with us for a while, perhaps you'll know that limiting your profits is not advisable. Put it that way. So we don't use take profits, prescriptive take profits. We do once we're in the trade, and we then learn how to manage it, how to manage each trade competently and with a high degree of consistency in our approach. And these things are really quite important. So if you can cut your losers short, let your winners run, and be able to apply it consistently, that is very much likely to be a recipe for success. And certainly we can help you with many other facets of trading these financial markets. So we have our daily trade plan at 9 o'clock every evening for 30 minutes. We have our Capital Growth Live Trade Room for 15-20 minutes every evening as well, for those that just want to grow capital over the medium and longer term. And you can get all this information from our website, which is there up on screen, thelivetraderoom.com. So if it could be of any help to you, we've got some quite affordable membership packages there as well. I digress just a little bit. So we're going to be looking at the pound. The pound is clearly strong. The CAD is quite strong as well. It's benefiting from what we're seeing across in the oil markets, which is a very, very strong oil market, largely due to the negative impact that the winter is seeming to have on supply. So there is concerns in the US to do with the power grid to bring a lot of these energies online are really taking a bit of a hit. So when you restrict supply in any particular market, especially oil, it has that impact of pushing prices to the upside. So okay, that's crude oil, and we were talking a little bit more about the CAD. There is a viable opportunity down here. It's kind of nitpicking, and we do have strong levels of support, just below these levels. So the structural failure to the downside will be the 2186, and we're a little bit off that just yet. It is a viable trade for those of you that are passionate about the Canadian dollar against the US dollar. There's a lot of it's a very similar sort of candlestick to the dollar CAD, except it's inverted. So the Aussie dollar is looking still quite bullish, as you can see, and we've got a lot of resistance up at these levels. So what we would feel more confident about is if we actually close above these major highs or close below those major lows. That's your kind of green light, really, to see the confirmation that we would generally need to see before we'll put our capital on the line. So we want these markets to perform as per our expectations, not really to be pushed around by these markets. So we want them to respond to what's happening in the news. We want to be able to understand and have a fairly logical approach to these markets, and sometimes these markets can be a little bit crazy, a little bit erratic, and a little bit all over the place. And what our traders will have found that during markets like that, we've generally preferred to exercise a little bit more caution when we trade and not be too anxious to be jumping into trades all the time, which is why one of our pillars of successful trading is actually based around your ability to be patient. If things don't make sense, and we do have erratic markets, and there's issues with correlations across certain markets, and things don't stack up for us, being patient is really important at that point. So we kind of want things to kind of make a little bit more sense. And recently, as you probably know, across many of these markets, some of the fundamentals behind it are more than confusing right now. And we don't need to have a particularly strong understanding of some of the fundamentals in these markets, because we largely trade technically. But the fundamentals, by far, there's they often contradict each other, or you're getting we're seeing contradiction in some of the technicals, and in just in situations like that, we're a little bit more patient really with our decision making. Okay, so moving on from the Aussie dollar, we got the New Zealand dollar, which is in this little sideways moving pattern. So again, for today's opportunities, it's not fantastic. We're still in the euro pound to the downside. So we're currently in the euro dollar to the downside, the Swiss, the dollar Swiss to the upside, and the euro pound to the downside. So it's that pound trade really that we were talking about last week, which is performing, which is by far the strongest currency out there, and it's largely off the back of the UK government actually performing quite well with the rollout of the vaccine, and it's likely to, the UK economy is likely to bounce back a little bit quicker perhaps than other markets and other jurisdictions. Let me just pull this up. So that's the euro pound. So we're going to add that to our trade. So as you can see, there's a bit of a pound. There's a bit of a pound theme occurring. It's by far the strongest market out there. The euro dollar is certainly a viable opportunity as well. Sorry, the euro yen, should I say, to the upside. The pound yen, we do like that market higher. Gold, it's just meandering, isn't it? So we'd prefer to be sellers than probably buyers at this point, but that's probably quite marginal, and that might change. So we'll have to just be a little bit more cautious with that. Oil markets, we spoke about the opportunities and the times at which these markets have moved, which is not conducive to perhaps many of us, especially in Europe. Sorry, let me take that up. So there's opportunities that we would need to keep a close eye out for. The problem with this market is we've gapped. So will this market roll back to the downside before we see the next move higher? We'll have to wait and see. So what we might do is put this on our checklist for tomorrow. See if we get a bit of a corrective move, ideally back to the 58.80. Would give us the next opportunity to the upside. So we'll put that on the long finger, and we'll keep an eye on the US indices markets. So the S&P 500 for S&P 500. There's two markets specifically. Again, we've had this sort of gap occur in the S&P 500. So we got bullish price action in the S&P and the Dow Jones. The Nasdaq itself is a little bit indecisive. We've had a pretty significant move to the upside again on the close of Friday's candlestick, and we've seen these gaps to the upside. So again, those are, when you see a market that gaps to the upside, you're always concerned about the close of that trade. And the FTSE has really accelerated to the upside. So that's a great trade we spoke about last week above the 65.77. It's a good breakout trade. So again, I don't think we're going to get a decent opportunity in this. There's no sort of pullback opportunity. So the oil market, the FTSE market, we do like these trades. We like them very, very much in the direction in which they're moving. What we would want to see, and again, this is really more about us being consistent in what we do, is to either benefit from a bit of a pullback, and it looks like that could be a little bit of a time in motion, or the alternative would be that we get a fairly shorter pullback, but we get some, where we get an opportunity to create a bit of a floor in this market to the upside, and hopefully see this market accelerate off the back of that, and then we can use these levels as an interesting opportunity to sorry, bear with me 1 second. So yeah, it's one of these so it's one of these situations where we either need a floor to be created or we need a constructive pullback. So again, we generally don't buy the out and out highs on a move like this. So again, for us, it is important to be consistent when we trade. So so that's the S&P. Sorry, that's the UK 100. So what we can do is we can take some of these off our checklist. So let's get up the euro dollar. Sorry, we get up the euro dollar as well, but we're going to get up the pound dollar first. So last week we were talking about this market breaking above the 85.54, and we've seen a really nice accelerated move to the upside there. Get up to dollar yen. So last week we were talking about the 104.85, so we've seen a nice move in that one. Breakout buy trade above the 144.98, and it's just rocketed to the upside. The euro pound. We've got that breakout sell trade, which we've been in now for a little while, and we've just had to again put up with that patience really of some of these opportunities. You know, where unfortunately it did go sideways for 5-6 days, and it's a bit painful. I agree, it's not ideal by any stretch. And then the S&P 500. Now the euro yen we can put up here. So we'll keep an eye on the FTSE and the oil, but it looks like that their levels are quite far away from those types of trading opportunities in the S&P 500. The opportunities that we look for, we can just keep a close eye on this in the corner here. So now we're looking for. Obviously, our approach can slightly shift. The pound dollar is at all-time highs, so we'd be waiting. Sorry, not all-time highs. Its current momentum highs, should I say? So it's waiting for a pullback in that trade. What we can do is if we just bring that back. So let's see at what price we would like to get into this trade. For those of you that want to trade so this was the level, the 38, 38.54. So it's a little bit lower than this level. Yeah, so it's just this breakout really that we've seen, but we've been moving sideways for certainly the European trading session. So this is, loosely speaking, a bit of a floor that's been created. So so what we can do is if we get a close above, what I'll do is I'll utilize this. So description, so it's a breakout buy above, what is it, the 139.12, 139.12, and we'll change it to, excuse me, I'll put that into the wrong box. So so it's a breakout buy trade above 39.12, 139.12. We'll just change it to green just to signify that it does represent a buying opportunity. So we've missed the first one. Now we can look to get into the second one. So our analysis would still look to go with this momentum. You never know when these opportunities when they end. So we would just anticipate markets pushing a little bit higher. Okay, that's better. So we're looking for that breakout buy trade above 139.12 for the pound dollar. Okay, it's a little bit on the fiddly side, but okay, so we're looking for that breakout trade above 139.12. The dollar yen, ideally we'd like this market to pull back to this previous high in here, and that could give us the next leg to the upside. And this is very much a yen. Let me see. So it'd be very much a yen weakness trade. So really, it's exactly where this level in here, the 105.18, would be where we would be looking to buy this market. So looking to buy above 105.18. So that's the dollar yen. The pound yen next. We just go into the smaller time frames and see where does this market give us the best opportunity to get in on a pullback. We kind of need a floor to be created or something constructive. It might be, you see, when you look at pullbacks, you want to see previous highs. So this is really the level that we would like to get into it, the 145.44. So this is actually a pullback buy trade. So we have a pullback buy trade. Um, 145.44. So you can see, might have to be a little bit patient with some of these trades. What price can we get into the euro pound? You see, you're looking for, when we see markets pull back, we're looking for previous lows. So there's a small low in here, which doesn't give us much value. So really we'd want to see this market pull back to the 87.42 for the next sell trade. 87.42. So so this time it's not a breakout trade, it's a pullback. Pullback sell trade at 87.42. Let me just double check. 87.42. So when prices get back up to this range, that's when we'll be looking to get into that trade. So so those are our pound trades. We've got the euro yen. We'll just post a little note on here so that you can see where we'll be looking to get into those trades. So clearly our directions to the upside. We just want to identify exactly where the opportunity would lie for us to get into that trade. And this is the reality of trading for us, is that if the market performs as per our expectation, then we look to get into it, and if it doesn't, then we won't. That will hopefully keep you guys on the straight and narrow with these markets. So this is a very significant sort of level of support and resistance, and really you'd need, with this straight sort of bullish price action, you'd want to see a corrective move, so maybe back to somewhere in and around the 127.45. So pull back, buy trade at the 127.45, and let's give that a nice green color. Okay, let's so we're looking for the pullback buy trade at the 127.45, and the S&P 500, we'd really kind of want to see the market come back really to previous all-time highs at 39.36, unfortunately. So those are our trades. So all of them have a little bit of work to do before we can get into those trades. I'll just put a little circle at the top of each high. So we're looking for this market to break above that level, the 39.12 in the pound dollar, and this market does need to just roll over to capitalize on that sort of pullback opportunity in and around this level in here, the 105.18. Again, we're needing similar price action. Just to conclude on the pound yen, so we're wanting this market to come back so we can take that next leg to the upside in and around the 145.44 level, or the 145.50 really is an important psychological level in this. So the pullback trade really is the opportunity in the euro pound. It's just the reverse of the pound yen, and again it'll be looking at that kind of level just in here. And then finally we'd be looking for, if I just shift the price on, and perhaps we'll yeah, so so this final market, we'd be looking for the market to actually come all the way back, and we're looking to get into it in and around this kind of region. So what we're using when we trade is support and resistance. We're identifying, and as you can see, you know, we do have horizontal levels. We do look at moving averages. We do have we use an average true range, but as you can see, when we trade, we clearly want to know what price is doing. So we don't really need a number of indicators to tell us that a market is in a bullish condition, or it's currently consolidating, or whatever the case may be. So we do want to focus on price. We want to see what is happening to price, and we want to trade it as per our expectation, like I've mentioned a few times. And for that, we want these markets to perform, and we want these markets to close above these levels, or to close below these levels, or to pull back to these levels. Then it's conforming as per our expectation, and then we can look to engage with those trades. And we can do so without needing to double guess ourselves. And all of these things are really quite important when we trade. So on that note, guys, we do need to call it a day. We are just running this event every day. We'll be broadcasting from 12 o'clock live, so we'll have our trade plan set up a little bit earlier than we have done today. So we do need to shoot off, I'm afraid. But if there's any questions, feel free to post them into the chat box. Obviously, if you can join us again, we'll have our trade plan from last night's webinar tomorrow, for example. So we'll be able to project that straight up onto the screen and discuss all those opportunities in a lot more detail. So we've created the trade plan from scratch today because it's a Monday. But the rest of the week now we'll have our trade plan to work off. So we hope you can join us for it. Just give us a thumbs up if you can. Click the bell and subscribe to our channel. We've got a wealth of content coming online for you guys. So over the coming weeks, hopefully we're just trying to get out at the end of this lockdown situation, which is kind of impacting us as well as it's impacting obviously everyone else. So do subscribe to our channel. Click the notification button, and we'll notify you, of course, when we go live in the future. And if we could be of any help to you, don't hesitate to go to our website. You can ask us any questions if you like. We've got a range of very affordable membership options as well on our website, so have a look in, see if something's suitable for you. There is only just a small monthly fee every month if you do want to take advantage of the additional sort of services we make available to our traders. So if that will be useful and suitable for you, then fantastic, we'd be delighted to help. Okay, so on that note, I'll leave you with these figures currently up on screen, guys. Thank you as always for joining us, and we look forward to hopefully seeing you again tomorrow. From everyone here, take care, and we'll speak to you soon. Bye for now.